threatens higher tariffs on several trading partners, but leaves the door open to additional negotiations after delaying those hikes until at least August the 1st. The president's threats include 25% levies on Japan and South Korea. Investors seem unfazed, though, sending stocks in those markets edging higher. And clashes in Kenya turned deadly. At least 11 people have been killed as protesters demand the removal of President William Ruto. Well, it has just gone 8 a.m. across the Emirates, 5 a.m. over here in the UK. I'm Joanna Versace in London and in Europe the rest of this week, getting you up to speed on these markets. Once again, tariffs in focus with further headlines coming out overnight. The Trump administration, the White House, has sent certain countries letters signaling that they're going to be looking to apply higher tariff rates as of August the 1st, but then also saying that they're open to negotiations. So the market has read that as a postponement of that potential deadline. And on the back of that, actually, the handover from Asian markets has been pretty positive or leaning towards the green. Asia Pacific up 0.1%. Even some of the countries in focus like South Korea and Japan not necessarily trading negative this morning after those tariff headlines. S&P futures not doing a whole lot, as you can see, unchanged, though yesterday we did see a bit of a negative close for Wall Street, with the major indices down almost 1% by the end of the day. The USD, though, slipping a little bit today and trade down about 15 basis points, about 0.1% or so. And typically what you see is when the tariff headlines hit, the dollar does tend to get sold. So this is another case in point. You're seeing a bit of that transpire this morning. One of the best performing currencies versus the USD today is the euro, because the euro the EU bloc was not included in the letters that the White House administration sent. And they've also signaled that they're looking to get to an agreement around a 10% tariff rate. We're going to talk more about currencies with our guest later this hour. And then Brent, I just wanted to pick up on the price action from yesterday. Look, we're trading higher today, $69, just shy of $70. So who would have thought that OPEC Plus would come out with that bigger than expected announcement to put those extra oil barrels back to the market? And the result was Brent trading higher. But there you have it, Brent trading just shy of $70 this morning, a smidge cheaper in trading, but still higher than where we were than on Friday before the OPEC Plus announcement. But let's get back to that tariff story. The U.S. has unveiled the first wave of promised letters that threaten to impose higher tariff rates on key trading partners. But President Trump has hinted he is open to additional negotiations, suggesting that the new August 1 deadline could be extended.
I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now.
For more, let's bring in our chief North Asia correspondent, Stephen Engel. Steve, it's been, again, so many headlines coming through about tariffs the last 24 hours. But is it fair to assume that this July 9 deadline that was supposed to be the big tariff deadline this week has now been shifted back towards August the 1st, i.e., as investors and people who are watching these markets, there's a bit more wiggle room for these deals to get done?
Yeah, I mean, it buys a lot more time. Well, not a lot more time. 3 weeks is going to go by awfully quick. The last 90 days went by too fast. Again, we've had, former deputy U.S. Trade Representative officials on our shows here in Asia, and they're like saying maybe the president doesn't quite understand how long it takes, really, to get these kind of trade deals done. And 90 days, if you look at Japan, if you look at South Korea, and you look at some of these nations who really went to Washington, really met face-to-face. I mean, the Japanese trade negotiator, Akazawa, traveled to Washington 7 times, has had numerous phone calls with, Howard Lutnick and Secretary Bessent, and yet they did not necessarily move the negotiations further, because you have to look at who got the letters and who didn't as it relates to who's getting the stick and who's getting the carrot, right, from Donald Trump. Mm-hmm. So the Japanese and the South Koreans come right to the top of the list because they have been negotiating, but they got that letter of 25% tariffs. Yes, they have a reprieve to August 1st. Yes, they have a lot of domestic political issues that are preventing the Japanese and the South Koreans from making a lot of concessions until after, like, for example, upper house elections are completed later this month. But again, it kind of shows that this is Donald Trump's approach to getting the negotiations moving from the other side.
Yeah, sending them a letter, essentially, to bring them to the table. But look, something else caught my attention. The letters didn't include any sectoral specific tariffs. And I do wonder, just looking at the price action this morning, whether the reason we're seeing Japanese markets and South Korean markets actually trade in the green this morning is because those sectoral tariffs have not been included so far.
Well, they're not included in the negotiations necessarily for the reciprocal tariffs, and that's a big concern of a country like Japan, which its biggest export essentially to the United States, and the biggest source of that trade deficit the United States has with Japan is automobiles. And there's a separate sectoral tariff of 25% on automobiles, plus 50% for steel and aluminum. So the Japanese will want to negotiate, and have been negotiating from what we heard, to get a all-encompassing deal for the reciprocal tariffs and the sectoral tariffs. And that's what's really proving troublesome. Something that Scott Bessent has said, you know, these negotiating partners, these other countries, didn't necessarily name Japan or South Korea, but he said in the last few days that they've been dragging their feet on these issues. So again, the fact that they did get a letter, in fact, Japan had its rate increased by 1 percentage point from 24 to 25. Maybe, again, carrot and stick approach here, and to move these over the next 3 weeks, possibly get some sort of concessions from the Japanese.
Bloomberg's Stephen Engel, thank you so much for breaking it down for us. Well, joining us is Parisha Saimbi, FXLM Strategist at BNP Paribas. Let me just start off by asking you whether there still actually is tariff premium being discounted into U.S. assets at this point. U.S. equities very close to record highs have just pulled back. Is it perhaps only the USD that is reflecting some of the tariff uncertainty at this point?
Yes, exactly. We don't think that markets were necessarily pricing too much of that tariff risk premium, but I think what was evident in the price action yesterday when the dollar did start to strengthen broadly across global currencies, it was perhaps suggestive of the FX markets starting to respond, starting to price in some of that risk premium in fear of higher tariffs being imposed on other countries. But as we're seeing today, clearly with the extension to this August 1st deadline, scope for negotiation, some of that has already been reversing across the markets here.
What do you think it would take to bring buyers back in to the USD once again? The dollar is trading 9% weaker on the year, but we've started to see activity levels, activity data improve. So the survey data has actually started to show positive signs. Is that going to be enough for investors to start to want to buy the USD again?
I think to an extent. I think there's probably two scenarios that ultimately gets the dollar stronger. One is if there really is true US exceptionalism. And I think for that to be the case and for investors to feel more compelled to buy into this, we would have to see much more mild tariffs being applied broadly and for there to be limited inflation passed through into the US prices. But at this stage, I think there's still a lot of uncertainty. Looking at the deal that we saw with Vietnam, I think it's raising the risks, actually, that we're ending up with a scenario of higher tariffs that could actually accelerate the de-dollarization trends. But the other scenario that could get us to a stronger dollar is if we see big tail risks. I think exactly as we saw last month with the escalation between Iran and Israel, we did see the dollar strengthen. We did see investors reducing that short dollar position that they held in response to that crisis. But again, that proved to be short-lived. So ultimately, I think it's probably we would need to have more confidence in the US exceptionalism narrative for investors to feel more compelled into actually positioning long dollars again. And we think that that's unlikely in our view.
Yeah, let me ask you about the euro then. I see from your research that you've got a target of 120 for the euro. We're basically around 117-ish. Now, how much of the euro trade is just a manifestation of the weakness in USD versus an actual strong euro trade? Because it's surprising to me to see the euro do so well in an environment where the ECB are cutting so aggressively.
So I think there is two aspects to the euro story. I think one certainly is the de-dollarization theme. The euro is the next biggest financial market outside of the dollar. So to the extent that investors are nervous about holding US assets or holding dollar risk, they may be rotating to the European market. But I think the second reason, and really a core of our view behind our bullish euro outlook, is the fiscal picture. We saw a significant amount of fiscal spending being announced earlier this year on defence. We've seen the commitment from NATO to increase defence spending to 5% of GDP. And ultimately, we think that will be a positive for the euro outlook over the medium term that will raise growth and inflation expectations and ultimately could eventually see the ECB need to deliver rate hikes. So we're actually penciling in 2 rate hikes from the ECB in the second half of 2026 in response to that backdrop. And that should be, I think, a big positive for the euro as investors now find that there are bonds to buy, there are better growth prospects, so equities look more attractive, and there are higher yields on offer.
I want to bring it back to perhaps the place that I started, which is Trump and tariffs and the impact that that might have on some of the Asian currencies that you look at as well, particularly because Trump seems to be taking aim at BRICS nations. How do you think this is all going to play out? And is there a trade to be done in currencies in Asia based on some of the noise that is coming out?
Yes, I think the BRICS 10% tariff is certainly a concern. There are some countries within Asia that are already within BRICS and some that are vying to be within the BRICS. So I think first question is, how exactly is BRICS aligned defined and what is seen as anti-American? But irrespective of that, I think clearly we've seen a few things happening that are raising the risks that Asia will see higher tariffs than what may have been the markets-based assumption. We've seen the deal with Vietnam, and that's closer to a 20% baseline. We've seen these Liberation Day tariffs where there was actually a slightly higher tariff rate applied to Malaysia compared to even Liberation Day, and same for Japan as well. And then we've had this 10% BRICS talk as well, with an extra 10% tariff applying to those countries. And so I think what this is ultimately suggesting is there are potential downside risks for Asian economies if we do see these higher than 10% tariffs being applied across the board. There's also then the risk of this transshipping, which we saw in the Vietnam deal, being slightly mentioned as well in some of those letters overnight. If China does respond by trying to protect its own interests and retaliating on some of these other countries in Asia, that is another negative. So while, yes, there's room for negotiation and the rates announced overnight might not be the final levels, I think there are certainly risks that we could see higher tariff rates than that 10% we saw in the UK deal and what Trump has campaigned on. And ultimately, that could be a negative then for Asian currencies. But we think that that view is better expressed against other global currencies rather than the dollar.
Yeah. So
looking at Euro-Asia longs, I think, is certainly something that we'd be more invested in.
Fantastic, and a really good way to round up our discussion. Parisha Saimbi, FXLM Strategist at BNP Paribas. Thank you for coming on. And coming up, Donald Trump says a ceasefire deal in Gaza could be close, and more on what the U.S. president discussed with Israel's Benjamin Netanyahu. We're live in Jerusalem next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in London. President Trump has met with Israeli Prime Minister Benjamin Netanyahu at the White House, with the two leaders suggesting a ceasefire in Gaza is in reach. Netanyahu hinted he may be willing to expand the Abraham Accords that normalized Israel's relations with several neighbors. He's already accepted a proposal put forward by Trump that would pause fighting in Gaza for 60 days.
I don't think there's a holdup. I think things are going along very well. They just, left each other, and it was not a pleasant period of a few days. It was a little longer than a few days, but this was not a pleasant period of time.
Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Well, Dan, the Israeli Prime Minister is probably the foreign leader that knows the Oval Office better than anyone else. His second trip to the White House this year. What came out of it?
Well, that's a very good point. Good morning, Jumana. It's worth noting this time there was no Oval Office meeting, at least not in the presence of journalists, which may be unusual Instead, the leaders and their entourages had that dinner with a few grabbed remarks by press who were allowed in, and they also met in private. So really this meeting, despite the celebratory words, the warm words, the sense of optimism, it marks a work in progress. In parallel to that meeting, and the Israeli Prime Minister has other meetings lined up in the coming 3 days in Washington, there are envoys in Doha, in Qatar, one of the mediator countries, a country trying to mediate between Israel and Hamas, trying to hammer together yet another truce between Israel and Hamas that the president and other parties hope will lead to an end of the war. But there's a big question mark over whether that will happen, which may go some way to explaining why we have yet to have firm final statements on where this crisis is going from either leader in Washington.
Well, I think it's no secret that President Trump likes flattery, and it seems to be the case that the Israeli Prime Minister pulled out one of those gimmicks, I guess, or whatever you want to call it, but by presenting a letter suggesting that he had nominated President Trump for the Nobel Peace Prize. What was the objective of that, Dan?
Well, it may well be sincere on the part of Israel, on the part of the Israeli government. They definitely see, certainly since October 7th, peacemaking through strength, through superior firepower, I think would be a way of characterizing the Israeli approach, and it appears to have been successful. They also are, as you noted, trying to stay well on side with President Trump, not least as having weighed in on Israel's side during the war with Iran last month. He's now signaling intention to re-enter talks with Iran, perhaps to achieve a nuclear deal with Iran. The Israelis would not necessarily rule this out, but they do want to know for sure that should Iran be suspected of using such talks as cover for an attempt to reconstitute its nuclear program, that the Israelis, perhaps with US support, would be able to go back in militarily. So it would appear the Israelis are recognizing Trump as a peacemaker, as a potential peacemaker, while reminding him that war may remain the means, as far as they're concerned, for achieving an ultimate peace, if such is achievable in the Middle East.
Bloomberg's Dan Williams, thank you so much for giving us an overview of that meeting between Israeli Prime Minister and President Trump. Now, the U.S. State Department says it is revoking the foreign terrorist designation of Islamist rebel group Hayat Tahrir al-Sham. The group played a key role in the downfall of Syria's Bashar al-Assad, and the move comes just a week after President Donald Trump ordered the termination of sanctions on the country. Secretary of State Marco Rubio noted what he described as the positive actions of the new Syrian government under President Ahmed al-Shara. And to bring you some market news now, we have the 30-year JGB yield rising 10 basis points, as you can see there, up 9.9 basis points on the session. And still, the move in JGB long end continues. We are up almost 100 basis points since the lows we got to in April. We were trading at around close to 2.2%, and now you can see getting closer to 3.1%. So up 90 basis points just in the last couple of weeks. A lot of focus there, of course, on tariffs and what happens, but then equally the upper house election that's coming up, and the feeling that the ruling Liberal Democratic Party may seek to entice voters with cash handouts, i.e. implying more fiscal spending, a fiscal loosening. And that is why you're seeing these yields creep higher on concerns about the fiscal outlook. So that's been happening with those JGBs. And coming up, protests across Kenya turn deadly amid calls for the removal of President Ruto. We'll have details of the widespread unrest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in London today. At least 11 people have been killed in fighting between Kenyan police and protesters demanding the removal of President William Ruto. Tear gas and water cannons were used to disperse crowds as police blocked major roads to deter movement. Bloomberg's Ndiro Ganga joins us now with more. Ndiro, well, it's been almost 2 weeks since the first round of protests that took place this month at least. What sparked this second wave, and what do we make of Kenya's current political climate, with the fact that these protests and demonstrations seem to be occurring with an increasing frequency?
Hi, Joanna. So the protest that we saw called Sabasaba, and they're meant to commemorate the day that Kenya ushered in multi-party democracy systems. However, 35 years later, young people are out in the streets, and it's not to celebrate. They feel like the country has regressed, not just on the democratic front, but also politically, socially, and also economically. These are young people that feel that the country is failing them, systems are failing them. And unlike previous protests where they went to the CBD and they were cornered by the police, this time around these protests were taking place in satellite cities across the country. And while it was a new day and a new protest, the playbook from the police was the same old. Like you mentioned in the intro, there were water cannons, there were tear gas canisters that were being lobbed at protesters. And just like 2 weeks ago, police opened live fire at protesters and 11 people lost their lives. If you go back to June 25th, about 19 people lost their lives. This is 30 lives lost in less than a month for a country that is not at war, which begs a lot of questions. What does that say about the police? Kenyans feel like they're operating with impunity because they're emboldened by the government of the day that is yet to bring anyone to account. It also raises questions about institutions that are unable to operate freely and with the autonomy that is granted to them by the 2007 constitution that was promulgated by Kenyans. It also brings to light the political environment in the country. We saw former Prime Minister Raila Odinga give a speech, and it did not have the intended effect. And this is ushering in a new political wave where political godfathership is slowly but steadily coming to an end. June 25th, Kenyans were able to rally themselves. And what this made them realize is that they don't need political brokerage. They are now dealing directly with the government. They're interrogating policies from President William Ruto's administration and pushing back on development agendas that they feel does not fit the current bill and needs of the country.
And what impact have all of these protests had on the Kenyan economy in the first quarter?
Jumana, former Ghana's president once said, "Sikampe dede, money does not like noise," and that is what is unfolding currently in Kenya. We are seeing the economy take a hit. Growth in the first quarter is slightly slower than was projected at 4.9 in comparison to 5.1% in the first quarter in 2024. And a couple of sectors have taken a hit. You have tourism, you have manufacturing, particularly with tourism, food and accommodation nearly halved to 4.1% from 10.9%. And you have Standard Chartered Bank saying that with needs for fiscal consolidation, lending by banks really weak, and also weaker confidence from protests and police brutality, the prospects for growth are really lower, while the central bank is optimistic, putting it at 5.2%. IMF and the World Bank are putting it below 5%.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much. Well, coming up, President Trump's threat to slap extra tariffs against BRICS nations draws criticism from Brazil's president. We'll unpack what's at stake next. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump threatens higher tariffs on several trading partners, but leaves the door open to additional negotiations after delaying those hikes until at least August the 1st. Israeli Prime Minister Benjamin Netanyahu meets with President Trump at the White House. A potential ceasefire in Gaza, just one of the issues on the table. And clashes in Kenya turned deadly. At least 11 people have been killed as protesters demand the removal of President William Ruto. It's just gone 8:30 a.m. across the Emirates, 5:30 in the UK. I'm Giovanna Bersecci in London this week, but actually kicking off the second half of this show with some breaking news coming through from the RBA. So this is a bit of a surprise, actually. They have left the cash rate unchanged. So there was no change. The expectation from most economists, but not Bloomberg economists, I should say, is that the RBA would cut interest rates. But in fact, they have surprised by leaving the cash rate target unchanged at 3.85%. The expectation was that they would go for another 25 basis point cut and cut it to 3.6%. But they have actually left the rate unchanged. RBA judged that the risk to inflation have become more balanced, even though inflation has fallen substantially from the 2022 peak. Inflation is on track to hit 2.5% on a sustainable basis. The board voted by a majority of 6-3 to hold rates. So there you have it. It was a split vote, but still leaning towards a hold. They're waiting for a little bit more information on CPI, they're saying. And then vis-a-vis the global outlook, they say the global outlook still remains uncertain. And on the back of that, we're seeing losses on the Aussie index, as you can see there, extending some of those losses down 0.3%, even further. After they have decided to surprise the market by keeping rates on hold. The 3-year yields, no surprise, also rising after that decision as well. So I would say a hawkish pause out of the RPA this morning. As for broader markets, the handover generally from Asia Pacific has been pretty positive today as markets there digesting some of the headlines coming through from President Trump around those tariffs and the suggestion that the deadline has been pushed back to August the 1st, even though letters of intent have been sent out to certain nations. But mostly speaking, the handover pretty positive, 15 basis points from Asia Pacific. S&P futures not doing a whole lot today, even though they pulled back around almost 1% yesterday in trading. And then the USD slipping this morning, down 0.2%. We're seeing strong gains in the likes of the euro versus the USD, one of the blocks that has not been carved out for those letters or those higher reciprocal tariffs. And then Brent regaining a lot of the ground that was lost in the last couple of days, but $69 around there is where we're at, so just shy of $70, despite the fact that OPEC Plus came out with that much bigger than expected announcement to bring back extra barrels to the market over the weekend. Now, Brazilian President Lula da Silva has joined South Africa in blasting President Trump for his threat to slap extra tariffs against BRICS nations. For more, let's bring in Bloomberg's news desk editor, Jill Deeses. Jill, tell us more about how some of the BRICS leaders have been responding to Trump's threats around tariffs.
Yes, well, Jumana, we really only have responses from 2 of those leaders. So obviously, you just heard from Lula there. He was responding to that threat that Trump issued just yesterday when he was saying that, maybe there should be an additional 10% tariff on goods from BRICS nations, because of what he described as anti-American policies. Trump at the time didn't really elaborate on that, but the BRICS countries have certainly put out various statements, including those against Israel and U.S.'s actions in Iran. Some other concerns that Trump has about this bloc. But again, really, you're only really hearing from 2 of those leaders. So you've got Lula saying that these are irresponsible tariffs. You also had the South African President Ramaphosa earlier say that he's disappointed in Trump's words and everything like that. But you're not really hearing from the others. I would point out, though, that in the case of China, she skipped the summit. And I think, China's relationship with the U.S., certainly when it comes to working out trade obstacles, is very different from some of these other nations that are more actively trying to negotiate trade deals right now. You also have Russia, obviously very heavily sanctioned, wouldn't necessarily expect anything there. But I would point out that it was interesting not to really hear anything from Modi on the India side. We did actually just hear from Trump a couple of hours ago that when it comes to India, they're actually quite close to an agreement that certainly tracks with some of the reporting that we've been hearing. So I do think it's quite interesting that you're getting some differing opinions there, some different comments there from these BRICS leaders.
Yeah. The thing is, BRICS, if you look at it, it's Brazil, Russia, India, China, and South Africa. So pretty disparate group of countries. Can there be a coherent strategy on tariffs by the bloc, or is it just on a unilateral basis?
Well, I think what you're seeing here, Jumana, is at least at this point, it's not necessarily unified, right? The fact that you've got 2 of these leaders speaking out, saying these individualized comments, but you don't really have that coming from the rest of the bloc, I think does indicate maybe there's a bit of uncertainty there. Although I would point out, Jumana, that there's a whole lot of uncertainty about how Trump is handling these tariffs anyway. We had this deadline that's now coming and going. It's kind of extended. It's still unclear. Trump has kind of indicated, you can still negotiate even if I send you a letter, that kind of thing. So even just the Trump administration's positions on tariffs is a bit tricky to navigate. But, the thing that I would say is that you'd have to imagine, these countries are getting together and saying, trying to figure out ways to diversify away from the United States, trying to figure out how exactly they can diversify those supply chains. So that may be part of that strategy there. But, you do have, several of these nations, particularly, Brazil and India, that are quite interested interested in continuing to develop, trade relationships with the United States. Even China, which is not part of these letters, is certainly focused on that. So I think that that's all things that this bloc really has to consider here.
Bloomberg's Jill Desis, always good to have you on. Thank you. Well, turning to Africa now, where the impact of Trump's reciprocal tariffs is still unknown, with no African country having finalized a trade deal with the U.S. Joining us from Cape Town is Ziyanda Stuurman, an advisor at African Practice, a consulting firm advising investors and development partners across the continent. First, let me just ask you, Ziyanda, how feasible is it for some of these African nations, specifically the ones that could potentially be subject to much higher reciprocal tariffs? How easy is it going to be for them to find other trading partners away from the United States?
That's a great question. And unfortunately, the situation here is that many of the countries that have the highest potential tariffs against them, including Lesotho, Eswatini, and a number of other Southern African nations, are really quite small economies that really rely on whether it's commodity exports or sort of 2 to 3 main exports. That'll make it quite difficult to find new markets where they can sell at the same value and at the same volume as they would have to the US market. I think this is also true across the board for a number of African countries, where finding new markets, developing new partnerships isn't going to happen overnight, unfortunately. And so there will be at least a period of deep disruption, essentially to export revenue, as well as trade and diplomatic deals and relationships.
I remember when that reciprocal tariff list came out, one of the countries that we were so surprised to see was subject to one of the highest tariff rates in the world was Lesotho. And it was difficult to comprehend why specifically that country and some others in the African continent were on that list. What do you think Trump's objective is? What is he trying to achieve out of introducing these reciprocal tariffs on in many cases, in the case of Lesotho, low-income countries that don't actually have a lot of trade with the U.S.?
So I think there's sort of two parts to it. The first is to try and actually narrow the trade deficit between those countries and the U.S., which is nearly impossible, I think, particularly in Lesotho's case, given that Lesotho exports diamonds, textiles, and a few other products to the U.S., but buys very little from the U.S. Lesotho is a landlocked country within South Africa. It buys, a large number of its own, whether it's agricultural goods or other imports needed for its domestic markets from South Africa. So it is very difficult to see the logic as to why Trump is trying to narrow or close the gap on a trade deficit with a country like Lesotho, where it's virtually impossible for them to buy more from the U.S. And especially by trying to either bypass or buy less from South Africa. So there is a general unease, I think, again, across the African continent as to how the Trump administration is going about Trump's ultimate wish, which is to narrow trade deficits. And I think, at the moment, there's been reporting that there's now a template that's been sent out to a number of sub-Saharan African countries to try and start negotiations around trade. And that may look like ultimately some version of the African Growth and Opportunity Act, which is, of course, very, very different to the zero tariff agreement that had been in place with a number of African countries under Biden and other presidents. But it's hard to know and to see what that will look like at this point.
Yeah, new landscape. Do you think this creates an opportunity for China to step into the void and use the U.S.'s perhaps retrenchment in order to step in more aggressively, to build ties, economic ties, but also to exercise soft power in the region as well?
I think that's an excellent question. And what it also points us to is truly at this point an immutable fact. Whatever happens with Trump's tariffs, that's not going to be easily undone by another administration that's less antagonistic than Trump's post his term ending. I think they're going to be very permanent diplomatic and trade shifts and partnerships after Trump. And what that means is that, countries like China, many Middle Eastern countries, many European countries are re-looking at the African continent, re-looking at their relationships. And I think this is super specific in the context of mining and critical minerals, but there are also a number of other industries where we could see a lot more sort of close partnerships and ties starting to form. You have Narendra Modi visiting Ghana, and later this week will visit Namibia as well. You have countries such as Turkey and others really broaching new relationships. So whether it's China or whether it's a number of these countries and a number of these leaders I've just mentioned, there's very little about the relationship, the global trade relationship that will be the same, from Africa going outwards and the other way around.
Very clear. Ziyanda Stuurman, a pleasure to have you on the show today, Africa Practice Advisor. Thank you. Now, coming up, Iran's Ayatollah Ali Khamenei's domestic authority is being tested by the war with Israel. We'll discuss the Supreme Leader's grip on power next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in London. For almost 4 decades, Iran's Ayatollah Ali Khamenei has defined his rule and the country's place in the world through hostility to Israel and the U.S. That culminated last month with those countries launching military attacks on the Islamic Republic, killing some of Iran's most powerful army figures. Khamenei has also long been accused of neglecting Iran's Persian heritage, but state propaganda claims of victory over Israel are now being blended with images of figures from Iran's pre-Islamic era. Tehran has also been showing signs of willingness to re-engage in talks with the West. President Masoud Pezeshkian telling journalist Tucker Carlson that his country is open to negotiations, but finds it difficult to trust Washington after its strikes last month. Joining us now is Middle East breaking news editor Patrick Sykes. A really insightful deep dive into where the Iranian regime stands now, especially the Ayatollah. But there's one line in the article that is up on the terminal this morning that really caught my attention. Khamenei, the chief architect of the Islamic Republic, has rarely, if ever, appeared as vulnerable. Expound on that for us.
Yeah, that's right. I mean, in the course of that 12-day war, the authority of the regime and specifically its leadership, that, as you say, has spent all this time over the years since the 1979 revolution portraying itself as standing up to Israel, to the US, in the region and more broadly, is now looking extremely vulnerable. It wasn't able to defend those key military and nuclear sites. Around 1,000 Iranians, many of them civilians, were left killed. So it's, in a way, it's fallen short when the battle that it's long been vying for came to a head, really. I think now the regime is going to be in survival mode, looking for a way, first and foremost, to retain the Islamic Republic as a system. But with Khamenei aging and having come through this battle largely in hiding, only emerged just the other day after quite some delay, it's really going to be up to him to try and reassert some authority without at the same time alienating the public even more than we'd seen before.
He is 86 years old, and this question of succession has been swirling for several years now into and in the run-up to this 12-day war. And of course, he is looking a lot more vulnerable after the war. Who could be a likely successor? Do we know at this point?
It's a really fascinating process, in part, and a fraught one, in part because it's only happened once before in the course of the Islamic Republic, right, when Khamenei himself came to replace Khomeini, the leader of the revolution, or the guy who became the leader of the revolution. I'd say there's two figures that sort of represent the path ahead for Iran at the moment. One is Khomeini's grandson, Hassan Khomeini. He's seen as closer to the reformists. He's been relatively moderate on some social issues and would be seen as a perhaps or have the legitimacy of his grandfather still. On the other end of the spectrum is Mojtaba Khamenei, the son of the incumbent leader Ali Khamenei. He's seen as much more close to the Revolutionary Guard, much more hardline. He supported Ahmadinejad and was thought to have had a role in the put down of protests under Ahmadinejad back then. So those are the two kind of extremes, I would say, representing the choice of succession.
Well, great read up on the terminal today. Patrick Sykes, Bloomberg's Middle East breaking news editor, thank you for bringing us that article on what happens next with the Iranian Republic. Now, for a look at some of the other stories that we're following. Office occupancy rates in Abu Dhabi's financial hub have hit 97%. But despite the high level of occupancy, some desks remain empty due to firms maintaining a token presence to comply with regulations. Rents have reached 2,900 dirhams per square meter annually, and firms are also struggling to secure adequate facilities. Abu Dhabi is responding to the demand by adding new office space as well as introducing flexible working spaces for smaller firms. Saudi Arabia's public investment fund is investing in New York City, putting $200 million into a site for a planned tower in Midtown Manhattan, just one block from Central Park. Bloomberg understands that PIF plans to take about a 2/3 stake in the site, owned by real estate developer-related companies. Related is known for its work at Hudson Yards on the western side of Manhattan, where it helped develop office buildings, a hotel, and retail space. And the Turkish lira briefly weakened past 40 against the dollar amid a risk aversion in global markets and as local political risks move to the foreground again. Turkey launched an investigation into the main opposition leader's party and arrested more of its mayors in a widening crackdown stoking investor anxiety. The legal crackdown has also targeted dozens of opposition officials, including journalists and business leaders. Turkey's benchmark Borsa Istanbul 100 equity index fell as much as 1.7% on Tuesday. And coming up, Samsung Electronics profit falls for the first time since 2023, hurt by U.S. curbs on China-bound AI chips. We'll look at the results next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersetchi in London. Samsung's profit fell last quarter for the first time since 2023, reflecting the deepening market share losses clouding the memory chip maker's prospects in the AI era. Tech reporter Nuli Pernal joins us now. Nuli, tell us more about these results. What stood out to you the most?
Yeah, hi, Jumana. Striking numbers, as you said, 56% drop in operating income from the year before, the lowest since 2023. It was below analyst projections, and revenue was flat. So what's happening here, they blamed some of the issues on inventory write-downs in their foundry arm. So that's the wing of Samsung that's actually making the chips. And they're having issues, of course, with trying to sell these chips to China, U.S., putting restrictions on where those chips can go. So that's what they're saying was the big impact here.
Bigger picture, I just took a look at where the stock is trading. It's down 30% in the last 12 months. Why is Samsung struggling so much? What is going on?
Yeah, so if you take a step back, this is really, the question is about where is Samsung's place in the future of AI? So apart from the foundry business, which is making the chips, they've also got these high bandwidth memory chips, which are paired with NVIDIA GPUs. These are high-end processors for AI that go into the big data centers. And Samsung has been trying to ramp up this business, but they've been losing ground to SK Hynix, another Korean company, and to Micron in the U.S. And they have been trying and waiting to get certification from NVIDIA from their latest high bandwidth memory chip, and that's really the future of the business. And while they've been waiting to get this latest chip certified, their rivals have stepped in, and so they say they're expected to maybe make some progress on that in the months to come. But really, it's about this new wave of AI, not the foundry business, but pairing these new wave chips with NVIDIA to do the kind of GPU processing with NVIDIA, which is really the future of AI, is training all these new LLMs.
I mean, it also seems to me that this is a company that is very much caught in the crossfire of the U.S.-China trade war that's going on and the fact that the U.S. have been applying chip curbs. So how is that showing up as well with regards to Samsung and their inability to send some of their AI chips or highly advanced chips to China?
Yeah, exactly. I mean, you're seeing, things are changing day by day with all of the new tariffs and restrictions on chips, and the U.S. sees these technologies as strategic. It wants to do what it can keep these chips out of the hands of China, but you're seeing all kinds of new restrictions on not just chips, but also on tariffs. So companies that have been trying to diversify their supply chains into places like India and Vietnam are also caught in the crossfire. It's also I think, a long and established Korean blue chip company that is trying to now pivot and get into the new wave of business, and they're dealing also with these geopolitical issues as well.
Tech reporter Newly Purnell, thank you so much for bringing us the latest on Samsung. All right, let's broaden it out and take a look at how broader equity markets are faring. Handover from Asia, actually pretty positive today. S&P futures, Nasdaq not doing a whole lot, but of course focus still on the tariff deadline, which seems to have moved once again to August the 1st. But that is it for Horizons Middle East and Africa. I'm Joanna Bersecci in London. Stay with us for Daybreak Europe. This is Bloomberg.